Hi everyone, welcome to BlockSnack, your daily crypto wrap-up for Tuesday, May 26th, 2026. We break down Bitcoin, Ethereum, and blockchain news. Fast, clear, and without the hype. I'm Jack, and I'll walk you through what matters today. If that sounds useful, hit subscribe and follow the channel.
BlockSnack.
In this video, we'll explore the bullish outlook for XRP, the weakening demand for Bitcoin, Ethereum's recent challenges, SUI's institutional adoption, DeFi security issues, regulation impacts on Polymarket, and AI security in crypto. And just as always, a quick disclaimer. This content is for informational and educational purposes only and should not be considered financial advice. Always do your own research. Now with that out of the way, let's dive in. Crypto analyst Steph is Crypto has shared a bullish long-term outlook for XRP, suggesting that many investors holding 1,000 XRP might be underestimating its potential. Currently, with a market capitalization of approximately $81 billion and a token price near $1.31, 1,000 XRP is worth about $1,310. However, when compared to the $147 trillion global asset market, XRP represents just a tiny fraction. The analyst modeled 3 scenarios for XRP capturing a percentage of global assets by May 2027. In a conservative scenario, if XRP captures 0.25% of the market, its price could rise to $5.97, making 1,000 XRP worth nearly $5,976. In a base case of 0.5% capture, the price might reach $11.95, and in an optimistic scenario of 1% capture, XRP could be valued at $23.90. These projections highlight the modest growth potential without assuming XRP will dominate the financial system. Historical cycles show XRP's share of global assets has remained small despite price surges. The analyst cautions these are scenario-based models, not financial advice. Moving on to Bitcoin. Although its price rebounded to the mid-$70,000 since February 2026, on-chain data reveals that demand has weakened to its lowest level since December 2025. CryptoQuant's 30-day apparent demand indicator shows a negative value of negative 147,000 BTC, indicating more coins are entering the market than buyers are absorbing. This rally has been driven more by futures trading rather than spot buying, as evidenced by a persistently negative Coinbase premium since late April. Futures-led rallies are more susceptible to rapid unwinding due to leverage, unlike spot buying, which is more stable. The $70,000 price level is critical, as it represents the short-term trader realized price, where recent buyers' paper gains diminish, reducing profit-taking incentives. Without renewed spot demand, Bitcoin's price may struggle to sustain gains above this zone, relying heavily on fresh spot buying for upward momentum. Now, for Ethereum, which has failed to reclaim the $2,150 level, a key technical support, a break below $2,100 could target $2,000, while holding above $2,150 opens a path to $2,300. Recent data shows Ether investment products experienced net outflows of $222.8 million last week. Institutional holders are reducing exposure, with Harvard exiting its ETH ETF and Goldman Sachs cutting ETH holdings by 70%, down to $114 million. Despite high on-chain activity, the price lags behind, reflecting cautious market sentiment. The upcoming Ethereum Glamsterdam upgrade aims to improve protocol performance, but analysts like Hasib Qureshi interpret Vitalik Buterin's comments as bearish for price, emphasizing decentralization and security over commercialization. Next, we look at SUI, which is gaining institutional visibility through Grayscale's new ETF offering. This ETF provides regulated institutional exposure to SUI with native proof-of-stake yield, offering a way for investors to gain exposure without direct crypto ownership complexities. The launch coincides with structural improvements in the SUI network, such as the removal of gas token requirements for stablecoin corridors, enhancing scalability and business adoption. Additionally, the Chicago Mercantile Exchange will begin 24/7 regulated SUI futures trading on May 29th, completing an institutional product stack of spot, yield, and derivatives. This institutional stack could boost crypto adoption and capital flows, although it may also create supply shock risks. Moving on to DeFi, JP Morgan analysts highlight ongoing security issues that block institutional money. The Kelp DAO exploit is a central example, erasing an estimated $20 billion from DeFi's total value locked within days. The attacker exploited a cross-chain bridge, minting $292 million in unbacked RSETH tokens, causing $230 million in bad debt on Aave. Losses spread due to DeFi's interconnectedness, turning localized breaches into sector-wide shocks. The Lazarus Group from North Korea, is attributed to the attack. While smart contract auditing has improved, cross-chain bridge security remains a high-risk area. DeFi TVL has partially recovered, but remains flat in Ethereum terms, raising concerns about organic growth and institutional capital attraction.
Now let's discuss regulation, as Indonesia blocks Polymarket, classifying it as disguised online gambling. The Ministry of Communication and Digital Affairs stated that using crypto or blockchain technology does not exempt platforms from being gambling products if they allow wagering on uncertain outcomes. Indonesia's ban is part of a broader crackdown on prediction markets in Asia, with similar actions in India, Singapore, Brazil, and other countries. The regulator warned Indonesians against digital betting activities, citing financial risks and legal violations. This move follows Spain's recent blocking of Polymarket and Kalshi for operating without gambling licenses. Finally, let's explore AI security in crypto. Researchers from Google and other institutions argue that AI-powered agents need to be treated as untrusted systems. Key security mechanisms include separating instructions from untrusted data, granting minimal permissions, and implementing system-level controls over sensitive information flow. AI agents are increasingly used in crypto for trading and Web3 applications. But recent incidents, like the banker assistant disabling transactions after a security breach, highlight vulnerabilities. Experts emphasize the need for safeguards like sandboxing prompts and restricted wallet permissions to ensure safe AI agent systems. That's it for today. Subscribe for daily crypto news, drop a like if this helped, and share it to support the channel. See you tomorrow for your next BlockSnack.